Hopefully. I'm not sure which one I'm supposed to be doing. Again. So can anybody hear me?
Yep,
Yes.
we can hear you and see your screen.
Okay. So we'll do a really quick capital asset accounting trading. This is SAP specific, so we're going to be dealing with how this happens in SAP. So WBS elements you'll hear related to capital asset work and project work. That stands for work breakdown structure. And it's a 6-digit number followed by a dot and then a 3-digit number. So like EC temp dot DOT or D20. They can be capital, they can be an expense account, or they can be revenue. And they can be highly detailed or simple depending on the needs of the project manager. So these structures can get broken down into, they can slice and dice them into a whole bunch of different things for a single project. Just depending on what they're needing to manage the project. So you could have one that's like for the architectural phase and one for engineering phase and one for the contractor, one for HVAC system, and on and on and on and on. So the first digit, so like the E in this one, tells you what bureau is doing the project. So the E here stands for BES. So it's an environmental services project. So as far as accounting goes for projects, as the project progresses, the costs will be charged for payroll on people's timesheets, and then an accounts payable when they're purchasing materials and services. And they will use those WBS elements when they're recording their time or when they're paying bills. And when the transactions are initially posted in SAP, they will initially get posted to whatever GL account, FI, and commitment item FM that they're charged to. So a payment for professional service will result in an entry in FI debiting account 521000 and credited cash. Since in FM we really don't have a balance sheet, we're just recording expenditures and revenues. Basically, all you have is a debit to the 521 account. Now, that really doesn't create a capital asset or a capital outlay. But what happens is that when we run the month-end settlement process, every time that SAP runs across a record that has one of those WBS elements on it, then it will do a whole bunch of journal entries during the settlement process. So it will debit a 177 account, which is capital asset modified accrual, and it'll credit a 595 CIP settlement account. So that'll be one document. The second document will be debit 562, which is modified depreciation or capital outlay. and then credit a 390 account, which is, they're called investment and GFA, which is general fixed assets. And then the third entry that happens is it will debit a 171, which is our accrual-based capital asset account, and then credit a 597 capital asset offset account. So all of that happens during the settlement process. Now, that's for project costs, but we could also do a direct purchase of a capital asset, so like a car or something. And when that happens, the capital asset accountant in the bureau will go in and actually set up the capital asset in the capital asset system. And then when they record the expenditure in FI, they will charge it to 177,500 directly. And since that account doesn't exist in FM, there's a lookup table in SAP that tells it which 561 account in FM to hit. Now, 561 does not exist in FI. So this kind of a wonky way of doing it, but that's what happens is, and if I were debiting 177,500 and crediting cash to buy that whatever it was, and then down in FM, we're hitting a 561 account. Now, accounting for a direct purchase in FM is to hit that 561 account, where in FI we do somewhat similar to what happens with the project cost, but instead of hitting the 595, we're crediting cash. But the rest of these entries are the same as if it was a project. All of that, that part of the settlement process remains the same. And again, that happens during the month-end settlements. Now, for reporting purposes, external M&S, CapEx, and personnel, we just debit the entry and report the expenditure. For modified accrual, we're debiting capital outlay and crediting cash. For accrual, we're debiting capital asset and crediting cash. And those are the accounts that would exist in the financial statements for those different bases. Now, maybe this will help. So these are all the accounts that get hit. So you got the cash, 171 capital asset, 177. That weird modified accrual account, the 390 account, your professional services, CIP, modified depreciation, and capital asset. So all of those have balances in them in SAP. But when it comes to actually doing reporting, all we're looking at for budgetary is that 521 account. Now, it could, if somebody had charged wages, it could be wages. And if they did a direct purchase, you would have one of those 561 accounts there. But realistically, of all these entries, the only two line items that have any impact on budget are the expenditure account and the cash account. For modified accrual, we use the expenditure account down here, but since we're going to actually record this as capital outlay, which is what the modified depreciation really is, the 562 accounts, we want to make the professional services go away. So we group in our group codes, we group the 595 account with the 521 account and it adds up to zero, and that goes away, and we end up just reporting a reduction in cash and an increase in capital outlay. For accrual accounting, we just use the cash account and the capital asset account, the 171 account. So although we got lots of accounts that we use for capital outlay, when we actually get to reporting, we use different ones depending on what basis of accounting we're dealing with. And the offset accounts tend to just be how we make stuff go away. So for the budgetary basis, the 171 and 597 get added together to add up to zero. The 177 and the 390 are grouped together and they add up to zero. And then the 595 and the 562 are grouped together and they go to zero. And then we're just left with the two accounts that we actually are interested in dealing with. So that's kind of how capital assets works in SAP. So totally confused or make somewhat sense, or?
I think the
This is
chart
really
is
helpful, yeah.
helpful, yeah.
Yeah, thank you, Ron. I was just looking at a big increase in professional services and wondering what it was. So now I have a better idea.
Well, it's important to understand these concepts because things have to balance. So like the 562s always have to exactly equal the 597s, and if they don't, then you know you've got a problem. Same way with the 390s and the 177s. If they don't add up to zero, you know you have a problem. So if you're out of balance or having an issue, one place to look is these accounts and their offset. Now, Dev is similar in that they also have offset accounts that you have to be able to, like the 551s for principal payments, and the 598 related to the offset of the principal payments. That has to add up to zero. So there are a number of places within SAP, if accounts don't add up to zero, that could be what your problem was. So it's important to start gaining an understanding of all these different accounts and how they fit together. So anyway, that's a quick and dirty analysis of that. Now, I'm guessing I need to unshare and reshare. Okay, so Kevin asked about how to analyze things if you have if your fund is out of balance. And one tool that I use to accomplish that is to pull a classic trial balance for the fund. And for this is general fund because it's one of the more complex ones. So you can go through a balance sheet and figure out what the accrual basis accounts are, what the modified accrual basis accounts are, and what the budgetary accounts are. And then up here now, I've got, this is the general fund, Fund 100 net position. And this is Fund 100's fund balance on the modified accrual. And this is general fund's fund balance on the budgetary basis. So the trick here is to know what every asset and liability is for each basis of accounting. And there's that one chart of accounts workbook that we have that can kind of help you with understanding this, because it has each account and the group codes that are associated with it. But I've been doing this long enough that I can kind of go through and just quickly do it. So cash and receivables fit for every basis of accounting. But this account is interrelated with adding the FPD-NR taxes receivable to a modified accrual. But that is not a budgetary issue, so it's not a budgetary asset. And then we've got all of our leases receivable. Since we are not implementing GASB 87 for budget, none of those accounts exist here. And then for, actually you need both of these. So both the loans receivable and the allowance for uncollectible for loans receivable do not exist in budgetary, because so in the GAAP basis, when we make a loan, we debit receivable and credit cash. But in budgetary basis of accounting, we debit expenditures and credit cash. So for the budgetary basis, there is no loans receivable. So we eliminate that for our budget.
So would these be the reconciling items?
Everything in yellow there is a reconciling item to get from budgetary basis to GAAP basis. That's why I kind of tried to highlight them as when you're trying to figure out your reconciliation between the two fund balances. These are your items that you're going to want to look at, because they're in the GAAP basis fund balance. They are GAAP basis assets, but they aren't budgetary assets. So you have to have these as reconciling items. And I didn't highlight that one. So unrealized gain and loss, we don't do the mark-to-market entry on the budgetary basis. So that's not a budgetary asset, or in this case, liability. And all these are capital asset related. And since capital assets don't exist in modified accrual, we don't include those in either basis. These kind of add up to zero, so it's not really a big deal. And again, we've got our deferred outflows that are just accrual-based accounts, so they don't exist in either modified accrual or budget. And similarly, compensated absences doesn't exist in those two bases. Now, internal loans are somewhat like the loans receivable, where it's a balance sheet transaction for modified accrual and accrual, that we actually take it to the flow statement for budgetary schedules. And similarly with the internal loan long-term portion. And then these are all pension related deferred inflows that only affect accrual basis accounting. And then we got the deferred inflows, so that would be another reconciling item. So has it. So that's how I go about it. Now, the first thing I did was to try to validate this number. So I carried it over to here. Now, for the gap basis financial statements, we actually combined 4 funds in order to get figure out the gap. So actually, you got it for your reconciling items. You have to actually double check those particular funds, so there weren't any reconciling items there. And there weren't any reconciling items in 214. But there is unrealized gain and loss in Fund 231 again, so that would be another reconciling item to get from gap to budget. So that comes up to the gap fund balance should be $231 million. So is that right or wrong? So we will double check that here in a minute. I kind of remember that number. So we came to a budgetary fund balance of 161 million. Now, last year's beginning fund balance was 102 million. And then I went, and we're going to be switching over to out of schedule 107 here in a minute. And so out of schedule 107, I came up with a $58 million change in fund balance. So that suggests that budgetary fund balance should be 161 million 422. When you compare those two, there's a $500,000 variance. So for some reason, budgetary fund balance is not tying out to what the balance sheet said it should be. So I know I've got a problem, and we'll switch over to schedule 107 here in a minute, but there's a couple ways I found to solve the problem, and one of them would be to assign a budgetary group code to account 451-600, which would change this number by 500,000, and we'd end up with a $7 variance, which is about what the general fund's been off for years, just from rounding errors. So we will go back to here and stop sharing. And switch over to schedule 107. So one of the tabs I use a lot and auto schedule 107. So if you're not aware of what 107 is basically we do an extract and do a data dump and add it to the, so we now have 5 years worth of data. The kind of yellowish or tan cells are FY22. So we've got a big database in the GL tab, and then the group code variances is where I go into and kind of look to see year over year whether things make sense or not. So what I did was to highlight all the asset and liability accounts that are supposed to be in GAAP. And then that totals to the 231 million and ties out exactly to what I came up with when I was analyzing the classic trial balance and trying to come up with what budgetary fund balance should be. So I'm pretty comfortable that, because I validated what general fund balance should be two different ways. Using schedule 107 and using the classic trial balance. So now what went wrong with budget? So where I got to one number for the change in budgetary fund balance, I just went over here to the budget column. And came up with a 58.8 million change. So why is it different? And why is the fund balance for budgetary wrong? So what I did was I went back to our big database here. So in our extract for general fund flow statements. So we'll take a look at all the flow statement accounts. So starting with account 41100, so taxes here. I went over here and started looking at every account, and does it have a gap group code and a budget group code, or is it missing one? So I just went down through here looking for anything that doesn't have where they aren't equal. So here's an example. And in this case, it's 501,000, which is right about the amount that I'm off. So what account is that? And what it is lease proceeds. So now we don't want to implement GASB 87 in the budgetary basis. So it would make sense for these accounts not to be in the budgetary basis. So not having a budgetary group code makes sense. But to double check, well, here's another one where it doesn't equal. And that happens to be the mark-to-market entry. Like we just talked about a little bit ago, we don't do the mark-to-market entry for the budgetary basis. So it makes sense that there is a gap group code, but not a budgetary group code. So we just keep scrolling through. And looking for, are there more instances where there isn't a group code in both places? And there's another one. So. Loan bad debt expense, and that makes sense because we don't, the budgetary basis, loans receivable are not a budgetary asset. So a write-off of a loan wouldn't be a budgetary transaction. So it makes sense that we don't have a budgetary code for the bad debt expense, because we don't have a loan. So you can't have a bad debt if you don't have a loan. So we got two more here. When there isn't a budgetary. And what they are is offset accounts. And it makes sense that you wouldn't have something related to a loan offset account, since there are no loans receivable in the budgetary basis. So now the other thought process that's going through my mind at this point is, well, it made sense that we didn't have a lease proceeds in the budgetary basis. But obviously there were capital assets, because let's go back up to the 562s. So these are our capital outlays accounts for the right of use assets for the leases. And they have both a GAAP group code and a budgetary group code. So why do they have a budgetary group code? It makes absolutely no sense, because we aren't implementing GASB 87 in the budgetary basis. So why are we recording capital outlay for the for the right of use asset? Oh, there's 4 of them. And again, they add up to the 501,000 that were off between budgetary and GAAP. So there are two possible solutions. One is remove the budgetary group code to these, to all the right of use asset 562 accounts, or we could add group codes to those proceeds accounts. And group them in with capital outlay so that it offsets the 501,000 here and makes it all go to zero. So that's how I went about figuring out why the general fund wasn't in balance between budget and gap. I guess we shouldn't have these capital outlays here since we're not implementing GASB 87 for budgetary basis. That makes sense or not make sense?
Yeah, that makes a lot of sense. I can go in and take out the group codes for those.
Well, it's either remove the group codes for these 562 accounts, the budgetary group codes, or add the capital outlay group code to the proceeds account.
Mhm.
So somehow we got to get rid of that $500,000 of expenditures because those were lease related transactions, and even on modified accrual, it adds up to zero. But in modified accrual, you have the proceeds account for 500,000, and you have capital outlay for 500,000. So since you didn't spend any money, you don't want to change budgetary, or you don't want to change fund balance. So you need the proceeds to exactly equal the capital outlay for the modified accrual gap basis. But you definitely don't want to be saying that you spent $500,000 on the budgetary basis when no money was spent. So even though we were implementing GASB 87 on the budgetary basis, if we were, then we would leave these accounts here with a budgetary group code. But then we would add a budgetary group code to those proceeds account so that it has no impact on fund balance. So anyway, that's kind of how I go about looking for issues and doing analytics. Because I will start with the classic trial balance and then figure out what my budgetary and gap assets and liabilities are. So that I figure out what my net position or fund balance should be. And then that is how I figure out whether, so if your flow statement is telling you that fund balance or net position should be X and the assets and liabilities say it's Y, you've got to, you're out of balance. But why? So I start with the classic trial balance and figure out, well, what should my net position or fund balance actually be, so that I know what my actual number is. And then if over in your fund book, your balance sheet isn't adding up to the same net position or fund balance as came up with by analyzing the classic trial balance, then it's a balance sheet problem. But if it does tie out, then you got an operating statement problem of some kind, and then you can start looking for it. And I use 107 a lot because it's just got everything in it. So anyway, that's kind of how I approach it. Questions or?
We'll have to analyze through it, and that's not it's not happening with this variance. I'm getting a different variance number. So I don't know what's going on. Maybe report
That
payments
could be
giving us
something else
bad info, yeah.
that we know what fund balance should be because we know what the assets and liabilities are.
Mhm.
And I mean, their gap basis general fund should be 231 million. And budgetary fund balance should be 161.9. And if you're not getting to that, then you have to figure out why. Now, we know that the 102 million is where we ended last year, and the 58.8 million change here is what the budget schedule in 107 says that the change should be. So if the change you're getting in your workbook is not this, then you could compare it to 107 budget tab and see where the variances are.
That's the change. So there's a difference between, I think we have a group code mapping problem, because if I add those three accounts to report painter, then we get that change in fund balance. But I have to add them, but they're already in audit schedule 107 for capital outlay.
Yeah.
It's a group code problem.
Yeah. Should be able to 58.8 million is what 107 is saying it should be. And that's off from what it needs to be to get to the right ending fund balance by $500,000. Now, if your workbook isn't telling you 58.8 million, you can start comparing all these different group codes to what's in your fund book and see where the variances are, because it could be that you're missing something in the fund book. But at a minimum, we have to fix the $500,000.
Just wondering if we're going to fix the group code, then it's possible that it's not only Fund 100, like that there's some more.
Your connection sounds like it's maybe not that great, Lorenzo, but I think what
Oh.
you're saying is that it might impact other
Other
funds
funds,
as well if
yeah.
we're making that group code change.
Yeah, that's my concern.
So it sounds, oh, go ahead, Ron. It
Yeah.
sounds like based on what
Yeah.
Kevin was saying that it's not showing up in report painter anyways.
Well, have you got all these funds mapped to general fund for gap basis?
Yes.
Gotta have Fund 100, 210, 214, and 231.
Yes, we do. They're all matching.
Okay. Well, I mean, this ties out to audit schedule 107. So again, you can go to the gap group code page in 107 and compare the assets and liabilities. You can go back to this page. And it adds up to 0. Well, you're off by the $4. So you should be able to, for your gap basis, be able to tie back and make sure that these are the numbers that are showing up in your gap basis.
Yeah, that part does tie.
But I'd have to look at the fund book to see. That's what I would be looking for is is the fund book not tying back to here?
Let me show you this. Share.
Well, we
Oh.
can do it tomorrow.
Later, yeah, okay. Right,
Because this is kind of cumbersome.
yeah.
Ron, do you think you'd be able to send us that file where you had the trial balance and you pulled in the different accounts, just for reference?
Sure.
Well, thank you.
Yeah, it was helpful to see how that analysis works.
Well, it's pretty fast once you really understand the classic trial balance and what accounts belong where. But that's the hard part, is getting to where you really understand the entire chart of accounts. And I was off initially. By some of these lease accounts. So like this one. Initially, I didn't have it as a budgetary account, but it obviously has to be, because I was off by that amount.
We can't see your screen anymore.
Really. Alrighty. It was one of the clearing, lease clearing accounts.
Oh.
For, it had like a couple $1,000s in it.
Oh, that makes sense.
Since I said this had said lease, I didn't include it as a budgetary asset, but I ended up having to, in order to get two bases of accounting to balance. But I think you should do it. So,
Yeah, well, thanks, Ron.
alrighty,
Thank you, Ron.
take care.
Thank you.